There's a lot of misinformation out there when it comes to investing in the stock market. But when it comes from some of the biggest channels out there on YouTube that are giving financial advice, and from creators who are making millions of dollars off of that advice and those videos, I find when those videos give out misinformation that it's just completely unacceptable and disgusting. In business, you should get paid for the value you bring. And misinformation is not value, it's a negative value. It sets you back. You're not growing to be a better investor, and you're learning bad habits that will lose you money and habits that will have to be undone. So on July 15th of 2022, Google stock did a 20-for-1 stock split. And here's what one of the biggest channels on YouTube, Andrei Jikh, had to say about this.
Google investors are about to make a lot more money. And that's because on July 15th, Google is going to go through a 20-to-1 stock split. And here's how that works. Imagine you have a $2 stock. Now when it splits, watch the two. You're going to get twice as many shares that are going to be worth half as much. So don't miss July 15th, because when it splits, the stock's going to become cheaper and more people are going to buy in. And when that happens, the stock increases in value. Don't miss out. Not financial advice.
So we need to set the record straight. First and foremost, Google investors did not make any money off of the stock split, unlike he said they would. Second, if you know anything about the market, you know that stock splits typically do not lead to an increase in the share price. And this is true for many reasons, which we will dive into in this video. And then the third thing is, this was 100% financial advice, even though he said it wasn't. So why is what he's saying wrong and bad financial advice? Well, we'll break it down into 3 different steps.
Step 1.
Stock splits do not change the value of the company. Although lower price shares might have the perception of being cheaper, they are not. Market value is determined by 2 factors. Factor number 1 is share price. Factor number 2 is how many shares are out there. This is also known as the shares outstanding. If you increase the shares outstanding by 2 times, but then cut the share price in half, the overall value of the company together, the market value, or also known as the market cap, will be unchanged.
Part 2
is retail investors. Stock splits typically only are attractive to retail investors. Institutional investors and insiders do not care if a stock is priced at $100 a share or $1,000 a share. They can afford a ton at either price. They have the money, they're not worried about that, and all they care about is returns. And returns are the same regardless of the situation. 10% gains off of one $1,000 share is the same as 10% gains off of 10 $100 shares. Therefore, institutional investors and insiders are not intrigued or not interested in stock splits. And when we look at a company like Google, we can see that it's 80% owned by institutions and insiders. Retail investors make up the other 20%. So those retail investors will have very little say in price action and the overall price of that stock. On top of that, the impact of stock splits to retail investors has diminished over the last couple of years. And this is due to the availability by many brokerages out there that allows you to buy fractional shares. Before, if a stock was $1,000 and you didn't have $1,000 to spend, you wouldn't be able to buy that stock. But now with fractional shares, you can buy as little as $5 worth of that stock at any given time. There are many brokerages out there that offer this. Webull is one, for example, and if you use the affiliate link down in the video description, you'll get 12 free stocks valued up to $30,600. If you deposit $100 US, this channel will be rewarded with 1 free stock. I highly appreciate it. Part 3, market performance. If you look at Google stock before the stock split and you compare it to the current price, you can see that we are much lower. But to be fair, the whole market is lower, so that might not be a fair example. Following the stock split, you can also see how the stock broke technical support. This is likely a trick so that retail investors are stopped out of their position. And in a bull market, this would allow institutional and insiders to buy more shares, and it would cost retail investors an opportunity to invest in a great company for the long term. In addition, and this is very important, if you look at this table, you can see that the typical performance of stocks after they do a stock split in the first 2 weeks underperforms the overall market. And you can also see that after 6 months, it's back in line with the overall market. So, what's the takeaway here? Well, short term, there's actually a negative effect with stock splits. And long term, because the overall value is unchanged, there's no actual impact with a stock split. Now, one benefit you get from stock splits is that it increases the amount that you can buy, which then allows you to be a little bit more flexible in some strategies that you can implement for your position, such as some income driven strategies from options, such as covered calls, buying puts to hedge against your position. There are many options trading strategies that you can implement. And with a stock split, those options become a little bit less expensive for you so that maybe you can implement them. So, yeah, I don't understand why he would say what he did. At least from my personal experience and the research that I have done, all signs indicate and has very little impact on the overall performance of the stock. Now, if you're interested in joining our community of traders and investors, you can do so by joining the Patreon. It will give you access to a live Discord server that's only priced at $5 a month. It's super cheap. It's priced that low to keep out scammers. And in comparison to other Discord servers that cost you over $100 a month, it's extremely valuable. In that Discord server, there's a dedicated channel where I will post all of my live trades. There are other channels where we discuss the market and opportunities that are presenting themselves. And as you can see by some of the trades that we have posted over the last couple of months, some of them have been very good. We look for high risk to reward trading opportunities that you can get into with a small account. If you're interested in joining, the link to join is in the video description. Outside of that, I thank you so much for your time. This is We Are Investing, and together we are invincible. See ya.